So yes, BG Dollar's back, and today, look, as you can see on the screen, S&P 500 is down 0.2%. Obviously, it's recovered well. We're into the last hour of the trading day. Today is the Thursday, 22nd. Now, I don't know if this video will be uploaded then, but whoa, first of all, let's just get into where have I been. You know, I'm a bit rusty on the old YouTube nowadays because I just haven't uploaded in a while. Now, all I want to say is, look, I haven't been lazy, people, right? Stop the lazy chat. Boom. What I've been doing, yeah, is my CMAP mortgage advisor. I've been studying for that, all guns blazing on that sort of front. We've got the driving lessons getting, we've got the test, got my driving test on the 15th of November, so I've got to hammer that out. And I've been working full time, so, you know, Monday to Saturday, long hours, up early, boom, come back late, then I've got to do my study and then my driving lessons on top. So there's just not much time to squeeze in to get the YouTube videos up. And now the only reason why I'm actually doing this is because I've had to actually get a whole schedule done and, yeah, try and do a bit before work, bit after work, so I can actually squeeze in YouTube, because we are in September, 22nd of September. Battery's running low. Okay, let me just charge it up one sec. As I was saying, we are in September. September is grind season. Why do I call it grind season? Well, look, the day's drawn out, all right? The nights are getting closer, you're getting darker earlier. Boom, there's not much out. Boom, you don't go out, all right? You don't go out. The winter is here, you know. It's cold outside. Not many people go out. It's more time at home, so you can get more time studying, less partying. Friends gone back to uni, so, you know, can't really do much going out wise. So yeah, it's just grind. That's why I call it the grind season. From now until about, let's say, April, May, until when the sun comes back again. You know, I've done all my partying, I've had my holiday, that's it, it's all done. Back to working, which is kind of what I love. It's probably my favourite season of the year, just because you can get so much stuff done. Like, you can come back out in my April, May time and like a new person. So that's what we're cracking on with. Anyway, S&P 500 down 0.1% now, proper coming up, maybe even going positive, hopefully, towards the end of the day. It's only 8:15, so markets do shut at 9 PM UK time here. Obviously, in America, it's a different sort of story. But anyway, here we are. Let's have a look. The Nasdaq looked down 0.7% today. Again, recovering well. It was down over 1% earlier, and you're seeing the markets recover well towards the end of the day. Let's just go through of the watch lists. Risky Whiskey, look, Affirm, you got down 5.5%. Corsair down 2%. You got Fastly down 2.5%. GameStop down 6.75%. SunPower down 3.85%. Blue Apron down 1.34%. AMC down 8.13%. Canopy Growth down almost 6.5%. Roku down nearly 5%. T-Doc down 2.18%. Shopify down 5.5%. Leveraged ARK, obviously all risk on stocks. And now I'm a big short. Let me just get it clear. I am a big short, so all these numbers are lovely jubbly for me. I'm laughing at this point. Lemonade down 4.29%. Honest down 3.13%. Got the Hood down there 1.3%. Alibaba down nearly 0.5%, all coming out. Recently recovered here, look, towards the end of the day. Rocket Companies down 2.33%. Virgin Galactic 1.79%. Oh, I'm just going to say, favourite companies to short right now are non-profitable companies and, of course, real estate companies. All right, any of them two, you're laughing in terms of shorting, because obviously interest rates are going up. That's another thing we're going to go through over this video. Fed, another big rate hike came yesterday, which I want to chat about later on. But let's just keep cracking through this. Chef down 0.18%. You got Toast down 2.63%. Firm down 5.86%. Marathon Digital down. Look, Tilray down. Not going through all of these, Riot. So yeah, just in general, look, a lot of these are risk-on stocks. Coinbase down down $63 now. You got Palantir down 3.77%. As I said, a lot of them are risk-on stocks. Let's have a look at how the safety plays are doing. Or you got J&J up 2.16%. That's what I mean. Safety plays do well. Risk-on stocks do bad. Look, you got IBM up 1.13%. Dollar Tree slightly down. Although I wouldn't really call Dollar Tree United Parcel Service safety play. You can class it as that, but not really. You got Costco down 0.6%. Again, not really a safety play. Berkshire Hathaway is definitely a safety play over there. Look, 0.3% down. You got Pfizer there, 1.89% up. So the health stock's doing well. Coca-Cola, 0.22% up. Mackie D's, look, down 0.84%. You got Walmart down 0.7%. P&G up 0.7%. That's a good safety stock there. But PepsiCo up 0.6%. You got J&J up 2.16%. So you saw the healthcares do very well today in general. AT&T just a flat there. So yeah, not really much going on. If we just go over to my watch list, we have some of like the big guns over here. Look, you've got Apple. This is like sort of the big stocks. Apple, DocuSign, Google up 1.5%. Google, they're really flying towards the end of the day. Microsoft up 1.5%. Look at that. Slight little dip towards the end, but, you know, that should recover. That should recover. Again, we still got 45 minutes left on the trading day. Qualcomm just going positive now. Autodesk, as you can see with most of these plays, they are recovering right towards the end. Nvidia got hammered, down 4.74%. PayPal again down 3.4%. Xpeng down. You got Square or Block, whatever you want to call that nowadays, down 5.3%. Amazon's down 0.5%. You got Disney down 1.8%. Salesforce up though. Meta up though. Meta's up 1.5%. Again, good little move for Facebook, I suppose. Tesla, big name, down 3.5%. Not good for Tesla shareholders. Etsy down almost 5.5%. You got Netflix up 0.6%. So yeah, and then AMD down 6%. So not very good for the chip stocks. AMD and Nvidia are not very good there. So that is the stocks. I'm not ending the video there. Oh well, hold up. We got the Fed rate hike that I want to go over, and this guy's looking quite let's just say not up to scratch. You know, he's looking a little bit shabby in that one. Seen better days. But anyway, Fed delivers another bigger rate hike. Powell vows to keep right. Going to redo that. Fed delivers another big rate hike. Powell vows to keep at it. Yeah. So let's just go through whatever all this stuff is. Fed lifts targeted interest rates 3 to 3.25%. Forecast show another large hike by the end of the year. Powell says no painless way to bring down inflation. Of course, that's what we've been saying, and yeah, Powell's starting to finally come to grips that, oh yes, there's going to be a recession. All this, that rubbish about, what was he saying earlier again? Oh, I can't fucking think now. What was he saying earlier? See, that's my schedule. You see, alarms are going off because I shouldn't really be doing the YouTube now. I should be moving on to my next thing because otherwise I can't get enough done. That's what I mean. There's not enough minutes in the day to get everything done because I've got to get home at 6. You know, I've only been home, 2 hours, 20 minutes, and I've got to do my flashcards still, and I've got to do miscellaneous stuff. And but anyway, I'm trying to think what Jay Powell was on about. I can't think of it. Hopefully it's in here somewhere. Powell said news conference after Fed policymakers unanimously agreed to raise central bank's benchmark overnight rate to a 3 to 3.25%. What we need is supply and demand to get better aligned. We probably in the housing market have to go through a correction. That means 20%, folks. Corrections, 20%. So he wants the housing market to go down 20% to get back to that alignment. The thing is, though, you can't really gauge it. When you see housing prices start to fall, it's too late because there's a lag between interest rates and so-called effects on the economy. So you can put interest rates up. Boom. By the time you start to see housing prices start to fall, you can then say change the system up. Yeah, housing prices have dropped 20%. Right, let's change it. Because there's a lag 4 months later, it's going to be down 40%. That's why it's hard for economists to sort of predict the future because they've got to. That's why we're in this predicament now. High inflation, this isn't down to the Fed now. High inflation is here because of 6 months ago, what the Fed was doing. High inflation was here, say, in March, April, because of what we were doing in 2020, 2021, printing all the money. Now we're seeing high inflation. Just like now, we're not in a recession, really. We're upping interest rates. What's going to happen 6 months to a year down the road? A recession, housing prices start to fall, people start to get laid off, unemployment rates go up. That's just how it works, people. That's just how it works. Look, growth, slow down. That's what I mean. When you see them start to talk about this now, this is predicting for, say, six months down the line. Powell said the Fed's target policy rate is now at its highest level since 2008, and now projects show it will rise to 4.25 to 4.5% by the end of this year, and ending 2023, 4.5 to 4.75%. So they don't actually plan to raise the interest rate that much in 2023. Powell said the indicated path of rates showed the Fed was strongly resolved to bring down inflation from the highest levels in 4 decades, and that officials would keep at it until the job is done. Yeah, so that's not really what you want to hear because, of course, that means the Fed's going to have to raise the interest rates more, which will affect businesses and unemployment and of everyone in the whole society negatively. There is no positive impact from raising interest rates, I'm afraid to say. The US Treasury market, which plays a key role in the transition of Fed policy decisions into real economy. Yields on a 2-year note vaulted over the 4% mark, their highest level since 2007. Of course, we're hearing 2007, 2008 an awful lot in this report. It just goes to show the last big recession was obviously in 2008. You know, we're around that sort of we're around that sort of benchmark. A lot of things are happening. Highest since blah the last recession. Highest since blah the last recession. So we're coming up to the so-called big recession, and yeah, I'm hopefully gonna make big bucks from it. That's the whole idea behind it. So we got to get ready for it anyway, and hopefully you can too. You know, I'm giving off this this sort of advice, not financial advice, obviously, but call it advice because I don't know what else to call it. But yeah, if you can get obviously ahead of the so-called economic cycle and plan ahead and understand what's going to happen and save your money up, then you're going to be looking in a strong position in years to come. Anyway, 4% highest since 2007. Don't really surprise me. That's a good interest rate though on the two-year note there for the Treasury market. You know, that's quite a decent interest rate there for 2 years. You know, 4% obviously each year. That's pretty good. So yeah, that's not one to miss out on, to be honest with you. That's one that's tempting. And of course, if you're from a different country like me, I'm from the UK, pound is falling to the dollar. So you're not only getting the 4% each year on the actual interest rate on the yield, you're also getting the dollar strengthen against the pound. So when you change that back from dollars to pounds, boom, you're making money on that side as well. So you've got a lot of things going there for the dollar. But anyway, I think that about wraps it up for BG dollars and the video today. Obviously, the Fed have raised 75 basis points. The Nasdaq is down. Let's have a quick little look now. At the end of the day, we're about half an hour away from the trading end of the day, and yeah, they're starting to dip back down. So who knows what's going to happen? So anyway, I'm back. Grind season is back. 22nd of September, today's date. Don't know when you're going to see this video. If you're still watching, please do leave a comment. Obviously, hit the subscribe, like, do all that kind of shebang. And yeah, I will see you in the next one, which will be soon, okay? You know, I'm not leaving it 2 months again. It's going to be soon, all right? Nah, it will be. It will be soon, okay? All right, okay, I think that wraps it. All right, people.